in the UK, the manufacturing PMI has fallen to its lowest level since February 2013. The June IHS Market CIPS UK manufacturing PMI showed a reading of 48, down from 49.4 in May. Analysts say today's further fall in the manufacturing PMI is no surprise, as the lack of clarity surrounding the UK's exit from the European Union continues to bring uncertainty that is heavily impacting the commitment of firms and their customers to make investments and placing major orders. Well, my colleague in London, Juliana Olainka, will tell us more about how the markets are reacting to this data and more. Good afternoon, Juliana.
Hi, Chimmy.
Well, it's a deluge of negative reading for the UK, from PMI to consumer credit to unsecured lending to mortgage approvals. How much worse could it get, and how are the markets reacting to this, particularly the currency?
Well, it certainly doesn't look great on the surface. As you said, mortgage approvals, they've fallen by 1% last month, and annual growth rates of consumer credit is the lowest it's been in 5 years. Now, these figures represent a volatile 2 months that saw credit demand dip in March amid fears Britain was about to crash out of the European Union. I said it to Bosun this morning, and I have to repeat it. For business in Britain, Brexit uncertainty is really hitting hard, and it appears as if UK manufacturing is experiencing the worst of it all. As you said, PMI figures were released earlier this morning, and the figures for the UK are actually much worse than anticipated. Britain's factory sector has suffered its sharpest contraction in 6 years. Now, basically, in the run-up to the 29th of March exit date, manufacturing companies had stockpiled on goods in panic to prepare for the potential of a no-deal Brexit. And the reality is we didn't leave on time, and the UK factories simply do not have enough orders to help them quickly plough through their inventory stocks. Now, unsurprisingly, this data hasn't rocked the positive start to the FTSE from this morning. The all-share is up 1.13%, the FTSE 100 is up 1.21%, and the FTSE 250 is up by 0.81%. Now, this is, of course, all thanks to that ease in the trade war over the weekend. Now, in the foreign exchange market, the sterling is still struggling against the US dollar, down 0.46%. A pound will get you $1.26, and down 0.12 on the euro. A pound will get you €1.11, and also down 0.09% on the Japanese yen.
Now, are there corporate news making headlines today?
Well, Jimmy, things appear to be tough for UK health and beauty retailers at the moment. Superdrug has more than halved its dividend from £50 million to £20 million, according to recently filed accounts, as the company drew over £30 million in loans from its investors. Now, Superdrug's had a pre-tax profit which dropped by 5% to £88 million. Now, this is a familiar story as UK high streets continue to trade in a challenging climate. Now, Boots, the alternative health and beauty retailer, has just today confirmed plans to shut down around 200 stores over the next 18 months, placing thousands of jobs at risk. Now, this announcement today comes after the company reported a 2.6% fall in the third quarter like-for-like retail sales, while gross profit decreased 8.5% compared with the same quarter a year ago. So tough times for the high street, as we've discussed before on your show.
Well, before I let you go, what's the outlook for the week, Juliana?
Well, Chimmy, as all appears to be well between Xi and Trump, in the UK, attention is likely to be put back to the Tory leadership race. Now, Jeremy Hunt appears to have annoyed business owners, as he said publicly that he would willingly tell people whose companies went bust after a no-deal Brexit that their sacrifice had been necessary. So you can see why that didn't go down well. British Finance Minister Philip Hammond, he's taken to Twitter today, asking both candidates to be cautious with regards to their post-Brexit budget plan, basically telling them not to make promises that the economy can't keep. And earlier today, Boris Johnson, the favourite to become the next Prime Minister of Britain, said it's very unlikely that the UK will leave the EU without a deal. That's what he's saying this week. It could be different next week. But for now, the markets are happy with that.
All right, thank you for those updates, Juliana. Let's continue to keep a tab on those developments. Enjoy the rest of the day.